If you just follow the path of developers, there's usually value there. And the developers within Web3 are primarily going to build on Solana. Those types of things are, again, when you start to see these types of investments in these types of projects and companies, that is not a bearish signal longer term on something like Solana or any protocol. So if you follow the investment dollars and you follow developers today, it feels like Solana is going to continue to be the fastest horse. And we're still, even in the drop of activity over February across all chains, Solana is still 50%, 57% of all activity. So even in a drawdown overall of activity, they're still the most active. Of the year, I was actually tactically bearish. I posted this thing on Twitter like the first few days of January and caught a lot of crap for it because people were like, dude, you're a bear all of a sudden. What is going on? I'm like, no. I think like the first couple of weeks of January are going to be a little dicey. I was right about that, but I should have just stayed that way for the rest of the quarter because my target was actually 75K. In early January, we got down to 89K and it immediately got bought. And so I was like, my target was wrong. Direction was correct. Arthur's been right so far, for sure. I will give him credit because I haven't given him any credit for the past couple of years on a lot of his writings and a lot of his calls. Do I think that it could go lower than 75K? Of course. Do I think it's likely? I mean, it's tough to say.
The market loves an underdog story, and early 225 delivered a twist no one saw coming. While traders celebrated year-end rallies, January hit like a cold splash of reality, proving once again that crypto thrives on the unexpected. The real shocker? Traders who bet against the hype when optimism was at its peak ended up laughing all the way to the bank. Joe McCann was one of the few to predict the turbulence, warning that January would start shaky. The backlash was instant, but as Bitcoin tumbled to 889,000, his cautious outlook didn't seem so crazy. While he missed the exact bottom, his call on the direction was spot on, a reminder that even the best predictions need room for error. He acknowledged Arthur Hayes' macro call, but the question remains, could the drop go even deeper? McCann won't rule it out, emphasizing that certainty is crypto's first trap. The market doesn't care about your convictions. It rewards adaptability and humbles even the sharpest minds. The real edge, changing your mind before the crowd does. Stay tuned for clips from Joe McCann's explosive interview for more insights. Don't forget to like, subscribe, and hit the notification bell for more in-depth content. Enjoy the video.
I mean, just the headlines alone since his inauguration I don't think we in crypto could have dreamed for better headlines. It's unbelievable. I mean, take the SEC alone. How many cases have they dropped in the past few weeks? Like all of them? I mean, just that alone is enough to be like, oh my God. Then you've got SAB 121 being repealed. You've got, the investigation into Operation Choke Point 2.0. You've got the banks now actually providing custody services in crypto. All of these things are happening in like a very small amount of time, yet the price is straight down. What? Doesn't make any sense, right? You would think probabilistically, like you've got all of this positive momentum, all of these headlines, massive 180 in terms of the regulatory environment in the United States. These should be bullish tailwinds, right? Not bearish tailwinds or bullish headwinds. And the price went straight down. And so you start to look at it and you go, wait a second, this has nothing to do with crypto. I mean, if you look at Michael Saylor and what he did last year, I saw reports saying he was effectively 28% of the buying of all Bitcoin last year, which is just an enormous number. And then if you add on, extrapolate out, well, what's the other 72%? If you assume even half of that is ETFs and you just had a massive set of outflows, well, you're going to need a regrossing, as I was talking about earlier with these hedge funds, of buying these ETFs again. Now, the reason that I don't think we're in, like I say, structurally in a bull market still, if you look at the set of potential outcomes and catalysts later this year, we've already heard about the strategic Bitcoin reserve. We already got SAB 121, et cetera, et cetera. What people always ask me, like, well, Joe, there's no apparent catalyst on the horizon. And I'm like, you're right. That's exactly the catalyst that you should be prepared for, is the one that you don't think is coming. Like, let's be clear, in October of 2023, there was a fake tweet or an incorrect tweet from like one of the, crypto media companies saying the Bitcoin ETF had been approved or whatever it was. And it actually it started the bull market, which is just so crypto to do that. That's a catalyst no one had in their model, no one had in their forecast, that a fake tweet or an improper tweet or an incorrect tweet would actually kick off, basically a gamma squeeze against these dealers. And now all of a sudden people are like, oh, I'm buying, and now it's gone. That's the same sort of thing that I think could potentially happen this year, because if you look at the tailwinds again, policy, regulation, you have Mubadala, which is the second largest sovereign wealth fund in the UAE, bought $500 million worth of IBIT last quarter. I mean, it's the seventh largest holder of IBIT in one quarter. Like these aren't day traders. These are people accumulating. And I think that race has started with a lot of the other sovereigns. So in my opinion, there's enough potential tailwinds. I mean, even Michael Saylor with what is he raising, like $42 billion or $21 billion or something? I mean, there's just an enormous amount of money to raise through 2027 to continue to buy Bitcoin. And if he's the only buyer, yeah, that's a problem, to be totally frank. But like, if I zoom out a bit and go, has something structurally changed macroeconomically or structurally changed with, Bitcoin in general? And currently the answer is no. We have seen, the dollar continues to weaken. We do see a repatriation trade happening in the opposite direction, right? So a lot of these companies, a lot of investors have poured an enormous amount of money into U.S. investment and U.S. risk assets. Those are coming home. And you can see this just in the flows. And you can see this in stock. Hong Kong up 20% for the year. If you look at like the German DAX, the FTSE, basically the rest of the world is actually doing better than the S&P 500 this year. And a lot of that is people repatriating cash home to, invest, I would say, locally or domestically. So what does that mean for crypto? I mean, the global liquidity picture continues to look relatively sound. We saw an uptick so far this quarter. The dollar is weakening. You do have yields coming down across the curve. We'll see if that stays that way, to be totally frank. And like, there's nothing wrong with a steepened curve. It's a pretty healthy market when we actually get that. I do think there's a problem with just the risk appetite. So like, one of the things that I tend to track is kind of like, what is the actual appetite for risk globally? And that is dropping as global liquidity is increasing. That's not good, right? And so a lot of the way that Bitcoin can be affected, I know a lot of people look at the M2 chart, they try to fit it as like a 6-week lag. And I just don't think that works, because a lot of this is sentiment driven. And the sentiment right now is still pretty bad, but fundamentally the U.S. economy is not in a recession. We're not nosediving into recession. I just don't see that being the case. Certainly, as we see here today, we could see what happens after April 2nd and reevaluate that position. But then globally, there is a continued demand and interest in crypto. You go to places like Dubai and Singapore, you can already see it being integrated into society there. I met with a founder that's building an amazing kind of peer-to-peer payments business for all of Africa. This stuff is happening globally. And so as I'm triangulating and kind of synthesizing all these data points, I still don't think that, the top is in and we're now in a bear market. It doesn't seem that way to me today.
McCann points out that while regulators retreat and banks dive in, with institutions accumulating, Bitcoin keeps falling, proving that the market doesn't follow logic. By now, it's clear the market moves when no one expects it, and the real breakout will come from left field. Looking at the bigger picture, sovereign wealth funds are loading up, global liquidity is rising, and the fuse is lit for a reversal. Bitcoin isn't just winning this cycle, it's dominating institutional adoption. ETF inflows are up, altcoins are stagnant. But take Bitcoin out of the equation, and one chain stands tall: Solana. Solana has passed the ultimate stress test without breaking, and now developers and enterprises are flooding in. The playbook is clear. Follow the builders, and right now they're building on Solana. That's where the real alpha is. Let's check out more clips from the interview for deeper insights.
What do you think are the next catalysts for Solana?
Yeah. So first and foremost, there's a reason it's called King Bitcoin, right? Like, it should, certainly with the institutional adoption, it should outperform. I've been saying this for, I don't even know how long at this point, that I don't think Bitcoin dominance has topped. I don't even think it's close. I think you have to have, we do it asymmetric. The majority of our book is in Bitcoin, and it's, structured beyond just buying spot Bitcoin. But there just isn't a case currently to suggest that altcoins are somehow miraculously going to outperform, or that the ETH BTC chart has finally bottomed, but it hasn't. This is not changing. Like, I hate to be the bearer of bad news, but like, I don't see an alt season anytime soon. We may get some idiosyncratic spikes here and there from, like, you know, the Solana ETF, the Ripple ETF, the Litecoin ETF, the Doge ETF, whatever. But for the most part, we're not going to see that for quite some time, because all of the tailwinds on the institutional side are behind Bitcoin. Okay, so let me just kind of establish that. Like, Bitcoin is going to be the king forever, in my opinion. Then, if you remove Bitcoin from that and go, what's left? What's going to be, you know, out of what's left? What are going to be the market leaders? What are going to be the things that are actually, you know, potentially outperforming each other? Forget Bitcoin. Really, it's going to be difficult to outperform Bitcoin, unless, of course, you're Dogecoin, which did outperform Bitcoin last year by a mile. So if you look at Solana, let me talk about Ethereum. And, you know, I've been a fan of Ethereum's technology, not a fan of the asset for years. That has been a good trade. I think that there is a structural problem to the way Ethereum is currently designed, as well as the roadmap that they put forth, and putting, frankly, a 2030 date on it, which to me is just, I don't even know how that's possible. It's just, that was wild to me. This is not a dunk on Ethereum. Like, it's a structural problem with the way the network is designed. And they have tried to solve a scaling problem through layer twos. I have been saying this for 3 or 4 years now, that the reason it's called an L2 is that you have two problems. Like, there's more problems than that now, because there's how many L2s are there. So my point is not to dunk on Ethereum, is to simply say that, like, the current approach is not working. And I don't see that changing miraculously overnight. And then in the meantime, you know, Ethereum's market cap, and even just the actual price of a unit of Ethereum is, I don't know, it's trading roughly 2,200 or something around there today. Like, it's not going to excite a lot of retail for the most part. A lot of people made a lot of money in the DeFi boom with Ethereum, and God bless them. Like, that was a great trade, and you probably were involved in all of the protocols that were launching on it, but that trade is over. So then you say, well, then what is the next thing? It's like, what are the scalable L1s? Solana, Sui, Aptos, there's probably a handful of others, say, right? Like, these things do exist, and we have Monad and stuff coming, right? But like, that kind of approach to layer one blockchains is fundamentally different than the way Ethereum is designed. And so within that, of course, I've been a Solana bull since 2019. I've been super vocal about this. I just think that the way that it's designed is correct currently. And by the way, it could get usurped by another new L1, or maybe Sui or Aptos or Say, or somebody does something so fundamentally different that it's better. But today, it's Solana. And Solana has also had, arguably, the biggest test of a blockchain's network in history, which was the launch of Trump's meme coin. And it didn't go down. In fact, the wallet providers were having issues. It wasn't even the chain, right? Because if you were able to transact on chain, you were totally fine. So even with that big of a test, what's next for Solana? I mean, all I do is look at exactly the things that you described. Where are developers going? What are they building on? They're building on Solana. In addition to that, institutions are building on Solana. So, you know, I saw a couple months ago, Fidelity has job openings for Solana blockchain engineers, right? I wrote about this a while ago, sometime last year, I think, because I had an open source company years ago and sold it. And when an open source project starts to get adopted within enterprises, it's basically a wrap. Like, you saw this with Ethereum, right? This is why I don't think Ethereum's ever going away. Once you started to see enterprises start to post job openings for Ethereum, and now subsequently it's Solana, you create this flywheel effect where it's like, these organizations now are relying on this open source technology and building actual products or services on top of it, which means they have to hire people that know how to build it and support it, which then means a cottage industry of support agencies, you know, customer service or whatever, like consultancies that are experts in Solana, can now start to support these enterprises. Well, if Fidelity hires a Solana blockchain engineer, I think the other asset managers might have to. And if Visa does it, I'm pretty sure MasterCard is going to do it. And if PayPal did it, well, I'm pretty sure, like, it starts to create this flywheel. And so to me, the developer kind of gravitation towards Solana on the kind of indie developer front, as well as the enterprise developer adoption, is a very, very strong signal as to why Solana, coupled with all of the other like performance benefits, blah, 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 all that kind of stuff. If you just follow the path of developers, there's usually value there. And the developers within Web3 are primarily going to build on Solana. Those types of things are, again, when you start to see these types of investments in these types of projects and companies, that is not a bearish signal longer term on something like Solana or any protocol. So if you follow the investment dollars and you follow developers today, it feels like Solana is going to continue to be the fastest horse. And we're still, even in the drop of activity over February across all chains, Solana is still 50%, 57% of all activity. So even in a drawdown overall of activity, they're still the most active.
Bitcoin has recently shown impressive resilience, defying expectations even as macroeconomic pressures drag down traditional markets. Despite trading below a key demand zone and bears regaining control, Bitcoin's subtle strength compared to the broader stock market stands out. While the S&P 500 declined sharply due to rising inflation and trade tensions, Bitcoin posted a modest gain of plus 0.4%, signaling a potential decoupling from traditional equities. Joe McCann's analysis supports this, pointing out the market's erratic behavior. Despite growing institutional adoption and Bitcoin's rising role as a store of value, the market remains unpredictable. Bitcoin's subtle rebound amid stock market losses suggests rising confidence in its long-term value, even amidst macroeconomic challenges. McCann also notes that the market rewards adaptability. Those who can pivot succeed, while the rigid fall behind. As Bitcoin strengthens amid global financial turbulence, it's clear the crypto market is far from predictable. Institutional players are strategically accumulating Bitcoin, positioning it for future growth despite short-term volatility. This could signal the start of a new era for digital assets, setting them apart from traditional markets. Thanks for watching. Please like, share, and subscribe. See you in the next video.